um, closing closing up 1 bip, Bulls win, I think. I made negative money today. I did good on puts earlier. I think I broke even. So we retested and failed the long-term trend again here at close. We're still holding above yesterday's open, or yesterday's close. Yeah, yesterday's close, 57.59. We want to see a failure of 57.55.75 to confirm an additional downside move. We are in a downtrend, kind of horizontal consolidation with a little bit of a bearish or bullish tilt, but overall doesn't look that great. Very slow breakdown of this top, but still a breakdown nonetheless. And I would say that a move back towards 56.81 is still probably pretty likely. There's a chance this breaks out to the upside, but I think it's pretty slim. And the fact that we got kind of a lower high here doesn't look great. I mean, we retested the bear flag that failed. Yeah, kind of middling, but probably we'll go look at it on the daily in a second. Commodities pulling back a little bit after yesterday's massive gains, but oil, copper, silver still up, gold failing a little bit. Oil back at 71.02 for light crude. Dollar moved up pretty hard today. More importantly, dollar moved up against the yen pretty hard. We got yields at the back end of the curve moving up pretty strongly. The 2-year tapped 4.2 today. Didn't close there, but it did tap it. The 30-year and the 2 and the 5 I think moved up the most. Or the 5 and the 10, sorry. So a little bit of re-inversion, and that's coming alongside a stronger labor market that doesn't imply more Fed cuts. But remember, as that leverage returns, that will be bullish, and we might start to see a turnaround in correlation as the dollar rises. The only thing keeping that from being super bullish right now, I think, is like, the obviously the risk of what's going on in the Middle East and the longshoremen's strike are kind of pushing back against that additional leverage. But if any of that risk premium falls off, watch out to the upside. Carry trade levered up pretty hard today. Dollar moved up very, very strongly against the yen, 6.5 to 6.75, and the 6 month from 6.3 to 6.55. So some big moves there, but as they leverage that up, right? They also tighten up the demand for volatility, and so we're starting to see that get a little bit closer to the zero mark. We saw it turn positive a little bit on Tuesday, and we may see it turn even more positive as we move into the end of this week, and the yield curve starts to contract more. As the yield curve contracts, the demand for vol goes up, the risk of recession rises. So bond portfolio managers are going to want long vol, and that's usually when we see VIX push up above the contract in front and start to move into backwardation. And we do have backwardation in the 3 month already. VIX 3 month at 20.6, whereas VIX spot 2010. Bond vol moving up alongside correlation. If we continue to see bond vol move up, we will probably see short vol and equity, or long vol and equities fall off. Skew kind of turning around yesterday, moving back up. That's slightly bullish. Keep an eye on skew day over day. If it continues to trend down, that's going to be incrementally more bearish. If we start to see it rocket back up again, nobody's taking any tail risk hedging into account. That's not great. And the move back up tomorrow is probably why we had such a strong bounce today, as some of that tail risk got pulled back. 70.77% of the S&P over its 20-day moving average, which marks a 6.81% decline over the prior day. Why the is that not on candlesticks? This could be reversing. I don't really like to use advanced decline as an indicator, but I would say it's not high enough for it to really be a good signal of anything. Correlation between VIX, cash VIX, VX, cash VIX, moving up still on the weekly. And I think that increased day over day today as well. Yeah, 9.805. And on the daily, still declining. So they're still trying to short vol pretty hard into this increase in vol, which is dangerous. Today it worked, but over the last 3-4 days, it's been largely failing. Fed fund futures didn't move much today. 0.46. Tomorrow's data, however, will have an effect on that. Tomorrow morning we get ISM services, which will be huge, not only for its ability to signal CPI in services prices, but also the employment data from services and whether services has moved into contraction. If services moves into contraction, that's a big deal, right? The US is not a manufacturing economy, it's a services-based economy. Services has been floating along just above contraction. So if we do see contraction there, in the prior month, that's gonna spook people, especially with the Fed's rate cut. We do have jobless claims tomorrow morning as well. That'll have some influence. I think we get S&P and ISM PMIs for services. So we will want those, for them to be bearish, we'll want them to be kind of in lockstep. So we'll want to see contraction across the S&P PMI and the ISM PMI, even though the ISM PMI is more data based. Factory orders are also tomorrow, and those are expected to drop quite a lot. I think the analyst estimate was like negative 3.2. That's also a big deal. So quite a lot of most of that data coming out after market open, but I do believe we get challenger job cuts, which are expected to rise, and jobless claims, which are also expected to rise in the pre-market. We also have some German and EU PMIs, and I think we have some Japanese PMIs tonight. Those could affect the dollar a little bit. I know expansion is like they're watching for expansion on the Japanese PMIs. If there's signs that services and composite are advancing, that could strengthen the yen and do a little damage to the leverage that was piled into the yen with the rising dollar today. I don't think German PMIs are going to be good. So even if the yen advances on the dollar, the euro will probably fall against it. And that leaves it kind of up to Britain, whose economy is just dog shit. So I would say probably tomorrow morning we're going to see the pound and the euro fall against the dollar. Yen might rise against the dollar a little bit, but the net gain on the dollar from the pound and the euro outweigh it. I love Forex, don't you? What a fun, stupid market. Anyway, I think that's about it, right? Did you guys have any questions? I am feeling chipper. I could take a question or two. No? Is penis? That's a good question. Yes. You seem slightly healthier. Thanks. Will my straddles print? Probably. But you did overpay for them. It's the sleep. I don't think so. It's probably the fever being under 105. Will my 5700Ps print? Maybe overnight. Closing below 5710 was not good for the bulls. Yeah, I still think there's a chance that we could dip down overnight. How's it doing so far? Yeah. Not above 5730, so that's a good sign. Still looks like shit. Did you test? No, I had COVID. Yeah, my doctor tested for it. Timeline for the strike effects. Which? Oh, from the time that the strike begins till we start feeling the effects of it? Immediately. I mean, this is a modern market. People are gonna speculate on that shit long before it has any real effect. But the real effects on inflation, I mean, less than a month. Think of this: in 1977, the ILA struck for 11 days successfully. They went back to work, and that 11-day lag in shipping, at a time when our imports were roughly, hold on, 23 times lower than they are now, was blamed for that strike was blamed for the spike in inflation in 1978 and 79, which was some of the highest inflation we experienced since the Great Depression. So, during the Arthur Burns era, inflation spiked and settled back down by 1976. This was oil the oil rush, the OPEC embargo, due to Israel. It's almost like history repeats itself. 1996 through 1976 through 1978, inflation flatlined right around here. The ILA struck for 11 days. Went on strike for 11 days. And then the subsequent 1979, 1980 Volcker era, inflation skyrocketed to almost 20%. I think we hit like 16. It was like 16.8, something like that, before Volcker brought it back down again. So that was an 11-day strike, with imports 23x less than they are now. Now there's a lot less ILA laborers. A lot more things are automated now than they used to be, and the automated parts of the docks can continue to run, but none of that automation works without the ILA there. So it's kind of irrelevant. ILA strikes increase inflation. Will that help to increase leverage on the yen carry? Yep. US inflation up, dollar up, yen down. 16% T-bills? That'd be cool. Imagine if T-bills were priced anywhere near the rate of inflation. That's why no one wants to buy the long end. Why would you? So the strike is bullish then, short term. If inflation gets too high, it'll freak people out though. The Fed will have to raise rates again. Then we get into another yield curve inversion. And if the Fed raises rates again, the idea of a soft landing is gone, right? It blows up. It'll blow up everyone who went long bonds, right? It's almost like I said, if they cut rates, inflation's gonna skyrocket. This'll help that happen. Just as God intended. But we declared victory today. No, Barkin specifically wrote a speech that said it's too soon. I'm gonna share the link for that again. It's called "Why Not Declare Victory?" ? An essay from Tom Barkin, Federal Reserve Bank of Richmond. The Fed's just walking back all their dovishness because they realized they fucked up. Or they knew they were going to fuck up, but it was okay for them to fuck up a little bit because they had some room for a rate cut. So they got to give everybody the rate cut they promised them, but now they have no upside cap on inflation if inflation rises, right? Without having to raise rates again. If the Fed fucking goes back to a hiking cycle, well, the Fed will wrest control back of real rates from Yellen, first of all. The second thing that would happen is Yellen will have to shift issuance to the back end. And the third thing that'll happen is they'll probably downgrade our garbage debt because it moves around faster than a shitcoin. How long do you think the strike will last? I mean, hopefully a while. I hope that mafioso Long Island douchebag who runs the ILA and gets paid way too much money to just complain about shit runs our economy into the ground and blows up our debt because we deserve it, right? Fuck the wealthy. And I'm one of them. But I mean, honestly, we all have way too much money. Banks need to flop bond yields to get out, right? So that seems the probable thing. Yeah. You think the housing market can take another hike in mortgage rates? I don't. You know how to make your money back. Other rich people didn't make their money, so they have no clue. Yeah, it's okay. They all went long the 5-year at 3.8%. They're gonna be a-okay, right? What breaks first? Good question. Short paper will get a reprieve. Short paper will get a reprieve if inflation spikes, right? And I wouldn't be surprised if they encourage the strike. So that'll stabilize the carry trade, probably increase available leverage in the carry. The real concern would be the top end, I think. I think the top end of yields would be where the danger is, like if the 10-year were to get above 4.5. But I'm sure the strike would end by then. It's just a question of if the carryover damage would would create a scenario where that would happen. I guess the Fed could try to step in one more time, right? What effect will that have on the real estate market? Well, if yields at the top end go up, mortgage rates go up. Mortgage rates go up, there's fewer buyers. There's already a lot of sellers. Look, the real estate market's getting significantly more liquid, like week over week, and defaults are increasing. So you're getting more short sales coming to market from the banks, right? And so the more inventory that posts up, the more prices are going to come down. But if the prices are coming down, nobody's taking a mortgage because rates are too high. Prices keep going down. That is a spiral. Kamala's tax plan is going to increase selling a bit as well. Nobody's going to pass that tax plan. Every single person in Congress is sitting on unrealized gains that they don't pay taxes on. You think they're going to vote for that shit? It's gonna get like one vote. It's gonna be Bernie Sanders. They can buy gold from Costco with their gains. Yeah, it's true. Anyway, okay, that's enough. Now I'm done. I'll see you guys tomorrow. Have a good night, everybody. Later.